Guys, welcome to Elliott Investments. Today is the 25th of January 2021. Just wanted to bring a couple of charts to your attention. First one being FTSE 100 index. As we can see, since the start of last year, around February time, the pandemic hit. Global markets fell significantly, down some 30 to 40%. Since then, we had a pretty strong recovery. And then over the course of about 5 months or so, we just went through this downwards to sideways consolidating pattern within a channel. Represented a good opportunity to sell the resistance and buy the support. And then in about, when was that? That was about November time, late October. We had some good news about the vaccines and had a strong performance in the share price since. That coincided obviously with that downwards support line on that channel in gold. It also coincided with a 23.6% Fibonacci retracement from the highs to the lows. So obviously a key point if the markets were going to rally from there. And yeah, since then they've performed pretty strongly. Let's go to the hourly chart. Just want to give you a little bit of an update on what's happened since the start of the year. Obviously, first 5 or 6 trading sessions, very, very strong in the UK. Many believing that there'd be a bit of a rotation out of some more high growth stocks into the more value-oriented companies. And the FTSE 100 really, the main constituents of it are the oil and gas stocks, the big oil majors, and obviously the banks as well. But obviously there was good news from some of the pharma companies as well. Since the 6th of Jan, we've just been trading in this consolidating downwards channel. We do have a positive algo for tomorrow, which means that we'll be buying the dips in the market. We also have a nice bit of support line. This is a 61.8 Fibonacci retracement from that highs to the lows. We seem to be finding a bit of support there. We've also got this downwards channel. RSI looks interesting, potentially maybe slightly oversold. So looking for, hopefully some good moves to the upside, but let's see how that plays out. Okay, moving on to the next chart I want to talk about is Amazon. Now, Amazon, a very popular chart. A lot of chartists talking about Amazon at the moment. They're talking about this wedge formation that we've been in for the last 6 months or so. I like the fact that the price has consolidated. The moving averages are catching up with the price action. And yeah, we've been in this channel. And we do have Q4 earnings from Amazon in I think it's 2nd of February after the bell, so that will be one to keep an eye on. I won't talk too much about the fundamentals for Amazon. There's a lot of research out there, but it's clearly benefited from the pandemic. The pandemic, I think February, March was around here on the chart, and as you can see, the market has prescribed a lot of value to Amazon, and their top line growth has been exceptional. I'm personally expecting more of the same from them. Not too worried about how profitable they are at this stage. It's still a high growth business. It is trading on 70 times forward earnings. It is 1.6 trillion market cap, but I do believe this move of certainly working from home, people getting more comfortable online shopping. But here's a company that's taking huge market share from a number of sectors. So again, Amazon is innovating and developing, and I'm expecting a big move with Amazon at some point. If we do go into the hourly chart, you can just see that wedge that we're talking about. It tried to break out of it in December, just before, about 30th of December, just before New Year. And then since then, again, we've broken out of this upwards channel, and we're just, that previous resistance is now becoming support. So be interesting to see how this trades. As I say, here, this is where they will announce Q4 earnings. So a number of sessions to go. What I'd really like to see is a couple more closes above this wedge formation, and that could bode very well for holders of Amazon. Last stock I just wanted to touch upon is Wynnstay, which is a UK listed, about 70 mil market cap company, manufacturer and supplier of agricultural products. A bit of commodity price inflation will help with revenue growth. A bit of Brexit uncertainty has caused a sort of weak valuation. It's trading on about 10 times forward earnings, about a 4.5% dividend yield. It is cheap. Brexit has obviously, the uncertainties around that have been removed. They did have a very good trading update around end of November. I think it was the 18th of November, where they talked about pre-tax profit being significantly ahead of expectations. Be very interesting to see how this one plays out. They do have full year results coming out in the next couple of days. They've previously talked about animal feed sales, particularly in September and October, being very good, as helped by a stronger red meat sector. Let's keep an eye on this, see how Wynnstay trades. I've got in these blue dotted lines here. That's just the gap fill and the previous areas of resistance. So if we did trade to this top dotted blue line where there was a gap fill, then could be looking, that would be an 18% rise roughly at about 422. So as I say, this is an interesting one. It's very low margin business, so it doesn't take a lot to go wrong for value to be destroyed, but they do seem to be trading well. Brexit uncertainty has been removed. They pay a nice yield and it is very cheap. So fingers crossed, hopefully we'll be looking to break above this gold ascending triangle, which again is a nice formation that bodes well for Wynnstay. That's it from me. Hope you found this video useful. Please do like it if you did. I'll probably do another one in a couple of weeks where I will recap on how these companies performed, but also give some other trading and investing ideas. Thanks very much for your time. That's it from me.